Hendrickson here, Tradition Mortgage, just giving you a quick Friday update, March 19th. I guess I would title this, What the Hell's Going On with Mortgage Rates? I think there's a lot of surprised people right now with everything going on related to the virus to see rates on the mortgage side suddenly spike. And I just wanted to give a quick update as to some of the underlying factors. As you know, the majority of the money to fund all these mortgages comes from mortgage-backed securities bonds sold out in the bond market by Fannie Mae and Freddie Mac. And unfortunately right now there's been a significant selling of those bonds. I think a few factors initially caused an uptick in rates. You had lenders that really were over their capacity load. So really they weren't accepting new loans, so they were kind of artificially raising their rate sheets just to slow things down. But really it's gone beyond that right now, where you see that a lot of the major institutions that invest in these mortgage bonds have been selling them fast and furious. I think a lot of it has to do with the banks that hold these mortgages. They've risen in value significantly as rates have dropped, and they've sold them off their balance sheet to get liquidity to fund their banking operations in preparation for kind of the upcoming economic slowdown, along with several other institutional investors that are selling mortgage-backed securities. So you just have a flight to sell your most profitable assets because you're underwater in so many others. So that's kind of pushing against the grain to see any mortgage improvements. Right now, with the governments across the globe stepping in and making strong statements regarding supporting their economies, really during the virus-related shutdowns, everybody's anticipating just a wave of long-term bonds flooding into the bond market. And this oversupply is going to push up bond yields, certainly going to raise interest rates in that regard. So again, you have some factors here all of a sudden now that are pushing against mortgage yields, where initially you had kind of the flight to safety where a lot of people were interested in investing in bonds. So kind of at a little bit of an inflection point. Now the U.S. government in particular has stepped up. The Federal Reserve is stating that they're going to be buying mortgage bonds as well too. Whether or not they can kind of create a lower level of rates with their purchases of bonds, we'll see. But I think we may have gotten past the low point of mortgage rates for the time being. So if you have a locked-in mortgage rate in the 3s right now on a refinance, I would consider yourself lucky. We're back up at mortgage rates over 4 as of this morning. Rates we haven't seen since towards the tail end of 2019, really before the virus scare. So again, it's a very fluid environment, but just wanted to give some background on why interest rates are higher right now. And again, it's all about the bond market and what's going on, so it's a little bit complex if you're not in the business, but just wanted to share that. Again, if you do have a refinancing process, I would cooperate as best as possible with your mortgage banker to help get that loan closed as quickly as possible, because again, you don't want to lose a lock if you're down in the 3s. So anyways, this is just a mortgage update. Appreciate your business, and we'll continue to keep it posted.